my name's Todd Williams. I'm the Managing Director of Unico Silver. We're listed on the ASX under the code USL. We are a new silver company globally. We're born from a 2-year consolidation strategy, and we have a vision to grow into a leading silver developer with over 300 million ounces of silver equivalent resources.
Todd, lovely to meet you. First time we've met or spoken, so maybe let's get to know the man. So tell us a bit about you, what you've done in the past and relevant to what you're trying to do today.
Yeah, look, so I guess I'm an entrepreneur by background. Really, Unico Silver is my CV. You know, my story is very much embedded in the story of Unico Silver. And if I could sort of just take you back a step, I grew up on a cattle station in outback South Australia. My family owned a lot of land along trend from Olympic Dam, which is the large copper mine operated by BHP. And, from time to time, we had, drill companies come out on our property. And I sort of grew up as a 13, 14-year-old, talking to the geologists, talking to the CEOs. And I used to be fascinated as to why they were sitting there perched on a gibber plane, drilling a 1,200-metre hole in the middle of nowhere. And so really that was the start of my curiosity. And I would say I was probably more interested in the guys above the ground, managing risk, managing uncertainty, managing budgets, certainly more interested in those characters in the story, opposed to, the scientists doing all the heavy lifting, looking what lies below the ground. So that was really the sort of kernel of inspiration why I got into the industry. And then really from there, it was just like, geez, how do I get that job? I want to be that guy sitting on the rig, making the call when to kill the hole, raising the money. And so I really just went on a journey to try and build up those credentials. I started in Colombia in 2015, worked for 3 years with some private equity, some private investors out of Adelaide. We put together a really compelling early stage portfolio with a very small budget and a very small team. That was really my first introduction to working in Latin America. So I've now been there for 10 years. I've made lifelong friends and, guys that I still work with today who have been fundamental to the story, to the Unico story.
Okay, but tell us about why Argentina, first of all. Obviously, with the kind of the new president coming in, people have great expectations. Before that, a little bit tougher, I suspect. So how did you end up with the assets?
Yeah, look, I guess you have to go back to Colombia, So we were in Colombia in 15 and 16. We formed the view that Colombia could get a lot better, not worse. And, honestly, it got a lot worse, a lot quicker than we expected. And so to some extent, we capitulated to Argentina. We thought there was a huge opportunity in Argentina because a number of major companies had just dissolved their Argentinian subsidiaries and just basically walked away, companies like IAMGOLD, Gold Corp, etc. And so we walked in there at a really interesting juncture in the history of Argentina with respect to mining. There was almost no competition. A lot of the corporates were asleep at the wheel. They really weren't looking beyond the head frame of the mine. And so we picked up some really interesting ground along strike from Cerro Leon, which is in the Santa Cruz province of Argentina, so down south. So anyone who knows anything about Argentina knows that Santa Cruz, is one of the sort of blue ribbon provinces to build and operate mines. So remember, Cerro Negro, which was purchased for over $3 billion US. And so we thought, how's this? We've got this great ground. We've clearly got the along strike continuation of the Cerro Leon geology and field. We picked it up and we put it into a public company listed on the ASX early 2019. So that was the transition from private life into public life. And, I guess was the reason why we're in Santa Cruz and the reason why we're in Argentina.
I mean, and is it different now? Obviously, with Fernando's out and Milei in, have things changed on the ground?
Look, I think it's a country of paradox in the sense, all the heavy lifting is being done up north, copper, lithium. When I first went to, the Catamarca province, the Salta province, it was just a really remote place. And you go there now and there's, telephone towers everywhere. There's processing facilities. There's guys in high vis and fire extinguishers wherever you can see. And it's a really bustling place. And, obviously the foreign investment has followed. We've seen BHP and a Lundin team up to acquire Filo. We've seen Rio Tinto put their foot in, probably not their toe, but their whole foot in with, the acquisition of Arcadium. So, obviously lithium and copper's doing all the heavy lifting. I think gold and silver is still very much in the shadows, and I think that's the opportunity for us, is that down in Santa Cruz, there's still a lot of corporates asleep behind the wheel. You look at our story, we're a $3 million junior in 2019, just, aspiring to make a discovery. And, it's been, the last 4 years has been really tough, but during those 4 years, we've managed to raise capital. We've raised over $65 million to date. We've closed 5 transactions. We've thought really countercyclically, and we've picked up assets really cheap. We've brought together 2 adjacent silver districts in an area that was previously overlooked, unloved, that was previously owned by 2 majors and 3 juniors, so a really fragmented ownership. And, we've brought together 160 million ounces of silver equivalent resources at a price of, or a cost of 10 cents Australian per silver equivalent ounce. And so now, during, all of this hustle and bustle with Filo and Rio Tinto and Arcadium, emerges this junior called Unico Silver, which has just quietly been going at it down south, and put together an incredible package, which at the moment, I think we are the 3rd largest holder of ounces in Santa Cruz, behind Newmont and AngloGold Ashanti.
Okay, so it's counter-cyclical thinking. So that obviously applies to Argentina. So when you went in there, I think most people would have feared to shreds, especially with Macri and Kushner before that. But also with silver, what did you see? Because if I look back at silver price back then, it wasn't so appealing. So again, what did you see?
Look, I think we just saw a real point of difference, to be honest. That was the draw card. So, I mentioned that we picked up some ground along trend from Cerro Leon and Joaquin, and, we're a $3 million market cap company with a couple of million in the bank. And, we were fortunate enough to make 2 discoveries within the first 18 months of commencing work at that project. So Mia was 19 metres at just under 49 grams gold, close to surface, and Malvina 14 metres at 2 kilos silver and just under 10 grams gold. And so when we announced the Malvina drill hit, once again, 14 metres at 2 kilos silver, 10 grams gold, there was nothing like that on the ASX, nothing new, exciting, high grade, world-class district, a place where you can build and permit mines. We had Eric Sprott on the register, the biggest silver ball there is globally. And, we're on the ASX. He traditionally does not venture to the ASX. And so we sat there and said, hang on, we've got an opportunity here. We have a real point of difference. The market completely shit itself in mid-2022. Interest rates went from 0 to 5%. Gold tanked. Gold equities collapsed 80%. And we said, hang on, this is a once-in-a-generation opportunity to pick up assets really cheap. And let's go for the unloved silver assets that no one's looking at, because we are in a province dominated by mega cap gold miners.
Right. So obviously, you're right with Eric. It's a case of you had me at silver with him. But what did you know when you were picking up these assets early days? Was there historic data there that you could build on? And obviously, you've done a lot since. But what did you know day one?
Absolutely, really simple. So when we were obviously trying to build our silver credentials, we ran the ruler over many assets through the Cordillera, through Latin America, and we had one really simple metric. The project had to have an existing 43101 or JORC resource. And from that, we could actually have a very quick filtration of, all right, how many ounces makes up the resource and how many meters of drilling has gone into making up that resource. And so then you get a very basic return on investment, drill meters in, ounces out. And what we wanted to focus on are projects that were undersized, that obviously makes them cheap, but not from a lack of endowment, but from a lack of drilling. We wanted to find projects that had 70, 80, 90 million ounces, that had only had 50, 60,000 meters of drilling, because we could say, well, hang on, the geology responds well to drilling. The industry average, we've done a quick study, the industry average is about 1,200 silver ounces per meters drilled. So you do 100,000 meters, you get 120 million ounces of silver. That makes sense. You see all the peers that we know and love, those numbers sort of check out. And so as long as we could acquire projects that, fall within that filter, then they're obviously of a quality that we knew we could grow them. And what was really interesting is that two projects stood out. Cerro Leon, which is one of our flagship projects, which is the Pinguino Serra Blanca districts, and Joaquin, and they just happened to be 50 kilometers apart. And so we went on a journey in mid-2022, engaging with those counterparties, and it took 2 years, but over that 2 years, we were able to consolidate the entire district.
You're giving us a slight insight into the strategy that you're applying. Like, all companies, all boards sort of go into this thinking they're going to find lots of stuff. So some of the stuff you said is, I think, universal, but you've actually started to deliver on some of that. So let's be clear about what the strategy is. Clearly, this isn't a land banking exercise. So what are you actually trying to do with this company?
Yeah, absolutely. So, originally we were looking to buy silver ounces below the cost of those ounces in the public equity market. So that was pretty simple. So we paid 10 cents per ounce, and, more recently in October, we were trading at about 80 cents per ounce. So there you go. There's the uplift. And, quite often we get people ask us, oh, hey, Todd, are you looking for more deals? Well, the answer is no. Because, respectfully, while we acquire a district, for 80 cents, it doesn't create any value for our shareholders on a per share basis. And, just to tease that out further, if you look at where we were 3 years ago, let's call it pre-resource, or 2.5 years ago, we had 200 million shares out and no resource. Now we've got over 400 million shares out, which, a lot of people will say, oh, that's a lot of shares, but we've grown the resource per share from 3 ounces of silver per 100 shares to 30 ounces of silver per 100 shares to now 57 ounces per 100 shares, based on the 3 transactions that we've closed over the past 18 months. So there's a trend, there's a trend that we're looking to grow our value on a per share basis. Now, I know you've got some follow-up questions. So that's our philosophy around acquisitions. We'll only engage in acquisitions if it grows value on a per share basis. Now, for us, we're trading now at 35, 40 cents because the market's come off a lot. And so really we're looking at our peers, and there's a clear sort of bimodal distribution of all the sort of silver explorers and developers. There's the guys that trade around 50 cents per resource ounce, and the guys that trade around $2, and there's a big uplift between those two. There's a 4-bagger embedded in that. And so what we now need to do is we need to prove to the market that, we are an advanced explorer of scale. We have the tons, we have the grade, and we can wrap a conceptual mine plan around that. And hopefully in doing so, we'll not only double the ounces, because, obviously we've got a very ambitious growth program in front of us. We've just launched a 50,000 meter drill program, 5% complete. So we are a growth focused company. So if you can double your ounces and also quadruple the value of those ounces, because you can work through those hoops and take off those layers of the onion, that is way more valuable than picking up some more marginal ounces elsewhere.
Right. I'd like the fact that you're focused on the economics and the measurements that the market is giving value to. That I think that's fantastic. And you've got the money now to kind of get after this 50,000 meter drill program. Is that fully funded, that 50,000 meters?
Yes. Look, we've got 25 million in the bank, and we've drilled 5,000 meters. We're sort of partway through it.
Yeah.
So we really hope to have that done calendar 2025 this year.
Okay, so let's talk about the kind of share register side of things, because you're obviously you're talking the language of institutions will like, and I like. Retail historically given much credit or credence or attention to silver companies in Australia. So can you just talk us through the kind of share register and what it is that they want to hear from you?
Yeah, look, so the share register has evolved a lot. It started off obviously high net worths, ultra high net worths, as they normally do. Very tight, trade by appointment. Pick up the phone and call anyone in the top 10 and you're pretty much speaking for 30% of the register. So you know how it works. That was, let's call it 2023, 2022. Pleasingly, we brought on Eric Sprott, which added a lot of validation. He's got 5% at the moment, just under 5%. Those ultra high net worths that I was talking about, they sit just under 20%. So they're guys that have always added to their shareholding, never sold. Whenever there's a big seller, they take the line out off market just to sort of clear the decks, so very supportive guys. And then as you sort of work through that, we've got Austral Gold, who come on the register. They've got just around 9%. They came as a part of the Pinguino transaction, which we announced November 2022. And so what we've got there is we've got, a very strong partner in Eduardo Erstein, who's a very prominent billionaire property developer in Argentina, and he's been a very supportive shareholder. He's actually been acquiring shares in his own name, in his personal account, and also acquiring and transferring shares from Austral Gold into his own name. So he sort of believes in gold, believes in silver, and importantly, he believes in our strategy, which is the reason why he did the deal with us in the first place. And then there's the institutional piece. We've historically been light on with institutional ownership. It was around sort of 4 or 5% before August last year. We then did 2 equity financings in the last quarter of last year, as you know, in August and November. And in November, we raised $22.5 million, and that was purely from institutions. And we had 2 really strong lead orders, one out of Zurich and one out of North America. And those guys have been there and they haven't sold a single share. So it's been great. So we're sort of institutional ownership's now sort of pushing up towards 20%, which is, obviously a really good change in the register. But then, more importantly, liquidity. Liquidity, like I said, 12 months ago, we were trading by appointment. We're routinely doing sort of 1 million, 2 million shares a day on all the exchanges. So that's really pleasing. And, as you said, that obviously brings in a lot more retail buying, and momentum feeds on momentum, as you know.
It does to a degree, but there's also obviously everything else that you're in control of and delivering too. As part of that, some of these fundraisers, you timed them well in terms of silver went through some extraordinary gains last year, continues to retain those levels. So that's something that's not say in your control, but you can take advantage of. How do you kind of see silver playing out? And what are those drivers?
What are the drivers? I think. Look, on the capital raising, we've always, like I said, we've raised $65 million in 5 years in really tough markets. 4 out of the 5 years, because we had COVID, we've had a Fed tightening cycle. So we've had to adapt to raising money in very narrow windows. I think we've always been the company that, if there's liquidity, if there's interest, if there's strength in the market, then you have to tap the equity markets and finance. We've always been that way inclined, and we certainly showed that in October. And I think that now becomes a real point of difference, because there were some companies that didn't. And, it's very hard to finance now Q1 versus Q4 last year. So there's some bifurcation in the peer group of people who did raise money and people that did not, So that's one comment. Now I've completely forgotten what your original question was,
well,
Matt.
It's really about some kind of commentary on the macro here. And like if I look back 5 years, it's a different place, right?
100%. So then silver. So obviously, we're discussing before offline. Silver's in a really interesting place. Like I said, in the Silver Institute, the first time we even mentioned photovoltaics was around 2014. So you've got an industry that's basically come from nowhere in 10 years. It's gone from 30 million to circa 300 million ounces of silver demand just for photovoltaics. So I think tomorrow will not be like the past. I think we're moving into a new paradigm, and we're preparing ourselves for that paradigm. And so we think we just need to chew through the above ground inventories. We know that the Western investor is the marginal buyer of silver, which will probably determine the rate and ferocity of this rally, we think. So a lot of that comes down to, obviously concerns around inflation. And I think, every time Donald Trump, proposes a new executive order, I think we see a lot more uncertainty coming through the markets. So
yeah, that's all of the above is true. Right. In terms of what you and the board are targeting as the end game, I'd like some color on what that looks like, because you obviously talk about being an advanced explorer now. A lot of the companies last year that are getting rewarded were these kind of development stories moving through to advanced development stories, and by that I mean near-term cash flow, or if you're producing cash. So how do you, what kind of profile of company are you trying to build for the market to be able to assess?
Oh, look, if I had to choose, and look, everyone's got their favourites, but I would say, we are sort of mirroring ourselves on what Go Gold did with Los Ricos North and Los Ricos South. It's a very clear comparable. They put their foot on both projects. They were advanced. They obviously paid real money to acquire real projects, and they did a meaningful amount of drilling and focus on growing the resource. And I think that's the opportunity for us, is if we can sort of show to the market that we can build two adjacent standalone projects that have clear operational synergies that can unlock metallurgical domains that otherwise probably would have been left out of the mine plan. That's a huge opportunity for us. And look, I can go into that in more detail if you'd like.
Do, because I think it's really important that obviously we've been working with Go Gold for best part of 5 years now, to understand what they've started off with and what they're trying to do. And I think as silver comes back on, they're getting rewarded for that. So it's important for you to lay the potential out for potential investors.
Yeah. Yeah, no, absolutely. And look, obviously the fact that that's side by side is great. So, with, for example, Pinguino, we consolidate that in one transaction, 100 kilometers of veins, 80 million ounces of resources, silver equivalent, and Cerro Blanca's the property next door. We rolled that into it. Now, if we look at the combination of Joaquin and Cerro Leon, which is the Pinguino Cerro Blanca consolidated block, if we look at the 160 million ounces of silver equivalent resources, over 105 of that is silver. Under 500,000 ounces of that is gold, and then you've got this sort of 15% polymetallic lead zinc kicker. Now, if we look at sort of Pinguino, which we actually think has got huge potential to grow, historically, the focus has been on the shallow oxide, with a view that, you could go into, low capital pathway to production. But the problem with that is the oxide only extends to 50 vertical meters. And below that, you've got these beautiful polymetallic veins that go to the ends of the earth, 400 meters below the surface. And there's, tens of these veins. So we sort of see that project potentially growing into, let's call it 50 million ounces of oxide and over sort of 200 million ounces of sort of mixed polymetallic silver, lead, zinc mineralization, and I don't think we should be scared of that, because that's where the opportunity is. And the idea is to build scale. So now if we look at Joaquin, which is next door, we have over 70 million ounces there. So combined, we have 100 million ounces. Now at Joaquin, the grades are lower, but there's a lot more of it. And the geometry of the ore body is simple. We've got two big pits in terms of lots of little pits. And so if we look at that, with scale, there's a clear pathway there for, some sort of base load or central cyanide leach processing facility, a tank leach. And we think we can really augment that and increase the production profile in the first 5 years, trucking ultra high grade oxide mineralisation from Pinguino to really juice up that production profile from years 0 to 5, And then once we get through that oxide, we would have hoped that we've shown to the market scale around the deeper polymetallic zones, and we can show a pathway to bringing on, a flotation plant, concentrator in sort of years 5 onwards within that conceptual mine plan. But look, that's all theoretical at the moment. That's how we're going to attack it. And I think it speaks to why at the moment we're focusing a lot of our drilling on the polymetallic veins at Pinguino, because we see that's the opportunity. If we can double, triple that resource and make that base case standalone, we know that it's easy to increase the Joaquin resources and the free milling resources by 50%. That's probably an easier task. And there's a clearer pathway to doing that.
I know it's theoretical and so forth, but internally you've kind of got access to data to be able to make these assumptions and look around at comps, etc. For the market though, and something I referred earlier, the companies that were getting rewarded last year and into this year, these kind of development stories where people can see a route to capital, a route to revenue, right? So you've got something of a certain size now. You've got 50,000 meter drill program, 5% completed so far for this year. That's obviously important to you. How much more exploration phase is there before we start getting into being able to kind of maybe start putting out some economic markers for the market to be able to judge you on?
Look, I guess, we can be judged by the results of this 50,000 meter drill program. But look, put simply, I think what we would like to achieve. Okay, so what we need to do is we need to increase the polymetallic mineralisation to 100 million ounces silver equivalent. We think that's base case. We've got a clear pathway.
Why? Give me the so what. If you're going to tell me hopefully now what you think you need to do. Tell me the why, and maybe the why the market should value those things.
Why it should value those things?
Yeah,
it's one of those, such a simple question. I'm confused.
It really is. But it really is a simple question. But I think that some companies talk about, we do this, and there'll be questions. Why do it in that order? What is that the most efficient way to do it? Is that the way that's going to drive most value now, or is it a case of if we've got to do it in a certain order because ultimately we end up with a better product, a better project? So I'm more interested in the thinking behind why do those things in that order? Why spend that money that way? So it is a really dumb question, but it's really, really insightful.
No, absolutely. So look, I think the reality is, we're focusing on the polymetallic zones because that's where all the huge potential is. There's 6 structures that have had 21,000 meters of drilling within those structures that basically show to us conceptual grades, conceptual thicknesses of over 6 linear kilometers of structures that we can point to and go, hey guys, if these grades continue, if these widths continue, there is going to be a meaningful re-rate in the MRE based on infilling, grid drilling these structures. And so that's what we've been doing. So we've put together an exploration target. Last year, we clearly articulated a roadmap around how we're going to grow the resources based on that historical drill hole data and the information we know around those structures. And we've already got to work proving to the market that 3 of those structures will be moving into advanced delineation stage. So it's tick, tick, tick. We're converting exploration concepts, exploration targets into advanced prospects, which will move into delineation and resource. And so, so for us, it's just the low-lying fruit. We've got 3 more structures that we're working through now. We're confident with our regional exploration that we'll find another 2 or 3. So there you go. You now have 10 structures which are coming from exploration through to resource status in a very short period of time. So that's firstly. So we thought in terms of cost and impact, that's where we're going to get the most torque for our shareholders. In terms of scale, 250 million ounces for us, we think is the appropriate scale to start saying, hey, I think we've got the asset base here that can produce 8 million ounces of silver per annum, scaling up to 12, in years 3 to 4 or something like that. So that's a nice high watermark for us to start thinking about feasibility.
Okay, and I guess where I was getting with that question is like the company's Unico Silver, clearly on the word silver, right? But you're also talking about polymetallic, and I guess what you've been thinking about is, well, the value of the contained metal in the polymetallic scenario, versus the recoverable versus the payable on that. It's like that's the best thing to get after quickest. Is that fair?
No, it'll grow absolute ounces quicker, which gives us clarity around what we're actually going to build, which gives us clarity around, is it 10 years, 12 years, which gives us clarity around how many tons the plant needs to be. So we need to know, what this thing could look like over a 10-year mine life. And frankly, we want it to be able to produce at least 8 million ounces of just silver, and we're comfortable that the combined portfolio, if we hit those resource milestones with the really nice combination of large base case free milling silver and gold, with this huge opportunity around, this big polymetallic system that's growing at depth, we think that we can show to the market, potentially a camp scale opportunity, which is the way Gold's described. It's a camp scale opportunity. And there's not too many opportunities like that. First Majestic speak about San Dimas, these things that just go on for 20 years, 30 years, 40 years. They're generational assets. And we think we've got a generational asset. And if you look at all the big discoveries in Santa Cruz, we have a saying, the discoveries of tomorrow are obvious today. The hiding in plain sight, and so we think you don't have to be a rocket scientist to go out and try and find the next world-class discovery. We think it's sort of hiding in plain sight, and it's going to come from either Joaquin or Cerro Leon.
Okay, so it's hiding in plain sight. So you say it's very conventional exploration. There's nothing too onerous for you.
And what I mean by hiding in plain sight, I'm probably switching now from conceptual mine planning back to my explorationist hat. You look at Cerro Negro back in the day, like that was 500,000 ounce, low grade resource. They had the vein zone, and there was this huge vein system, and it was sort of, there was you couldn't give that project away. Our chairman Peter Mullins was actually involved in a tender process to acquire that project for basically beer money, and it was like completely impossible. But for the people who wanted to see, the signs were there. It was a big system. There was metal in that system. And so, obviously it wasn't until they discovered the Eureka West vein, and they went on and made a number of other discoveries, Abajo Negro, et cetera. And we just think that's the opportunity we have at Joaquin and Cerro Leon. There's really only been one generation or one period of serious exploration on both projects, and that was basically from 2008 to 2011, a 3-4 year window. And then obviously, gold went from $2,000 to 1,000, and the tap got turned off, and so we now get to take these assets and reinvigorate them with capital, and a bit of curiosity, and we hope to make a large discovery.
Okay, you describe yourselves as, I guess, entrepreneurial. And I like to, buy the man, buy the idea. So you're an explorer now. Is that what I'm buying into? An exploration company?
Well, absolutely, because that's where you're going to get the growth. Language is important, and we could easily sit there. We've got 160 million ounces of silver equivalent resources. We could easily sit there and call ourselves a developer and put lipstick on that. But we're not. We're saying, no. The huge opportunity here for us is to take this thing to 300 million ounces and create a generational portfolio that a growth-hungry silver miner has to own. That's it. And so that's going to be done through exploring. Yes, we're respectful of conceptual mine plans. We're respectful of how it's all going to work. We're going to be very clear on the metallurgy, the mineralogy, and weight those against the size of the resource for each one of those veins and the opportunity. But the reality is the DNA here is we're here to grow this thing.
Okay, Todd, appreciate your time today. Really nice introduction to the story. Really interesting business plan. And let's stay in touch and see how you get on this year with the drilling. Appreciate your time today. Thank you.
Excellent. Thanks, Matt.